Hello traders, welcome to another video. In this video, we'll be talking about the differences between break of structure and change of characters. Also, in this video, we'll also be talking about how you can improve your mapping structure using true SMC. So this video will be a unique video, unlike any you have seen out there, and it will go straight to the point. It will be very brief, and yeah. So you can get your book, get a pen, and jot down as we go. So looking at this on my screen here, I have an illustration of a market, right? So I know that if I asked many people to map this out as a structure here, this is how they probably will mark it out, right? Break of structure here. Then we have another break of structure. This is how many people map their structure. We have another break of structure here. Then we have some people will go as far as mapping this as break of structure as well. Then they'll map this here as internal break of structure here, an internal break of structure. They mark a change of characters down here. So if this is a change of characters down here, right, this will be another change of characters. And according to them, this will be an internal break of structure here. And so on. This is a break of structure, this is a break of structure, this is a break of structure. But in reality, what is a break of structure here and what is not a break of structure? Starting from here, this is not a break of structure, and I'll be showing you why in a second. This as well is not a break of structure, so we remove that. Now, what is this? This is just a high and a low. We don't consider this as a break of structure because it doesn't meet our criteria for a break of structure. So now, what is our criteria for a break of structure? For a break of structure to occur, the break of structure must take out inducement first. And with this high here, you don't see any inducement taken out. You see that the market just created a high, then came back, then rallied up, taking out the high. That's not break of structure. Same thing here. Now, where is our break of structure if that is not a break of structure now in this case? So now this is a break of structure here. Now, why is this a break of structure? This was our inducement level here. Price came below this inducement level to take it out. Price took out this inducement level, right? This is an inducement level here. So price has taken out this inducement level before breaking this structure. Now the reason why this is considered is because SMC is a liquidity based strategy. It needs liquidity. Under these lows, there were orders resting under this low. So when the market pushed below, took out these orders, now it gave us a valid break of structure. So this is what you should trade. Trade valid break of structure. Don't trade this, you become liquidity. Now, after that, what do we have next, right? What do we have? We have this low here. You can see this is our first pullback. The pullback has been taken out. So this is our break of structure in this case. Here we have this break of structure here as well. Sorry, that's a break of structure. So I'll be showing you the difference between a break of structure and a change of characters, what you should look out for when marking them as well. So now this is our inducement. Normally I label my inducement X. You can label it anything so long as you remember that it's for inducement. So now, according to true SMC, there is no break of structure here again. This is all. You see here, this is not a break of structure. This is just a false low here. This is just a false low. This is not a break of structure here. There was no inducement on this leg to be taken out. So this doesn't count as a break of structure. This as well doesn't count as a break of structure. So now in this case, now where is our higher high? Our higher high is currently at this level. This is not the high. This is not the higher high. After this break of structure here, this is not our higher high. This is not our higher high. Our higher high is where price is. And once price takes out the inducement, our higher high is now confirmed to be the higher high. It cannot longer continue because if as the market is here, right, that's our current higher high because the market is still going up. The market is still going up, and if it continues to go up, our higher high will keep updating. Now, when the market takes out the first inducement, then we now can now have a a confirm higher high. Now, looking at this here, right, where if let's say you are waiting for a change of characters, where should you wait for your change of character? Is it here? Is it here? Or is it here? Now, where is our change of characters in this case? There are two scenarios for the change of characters, first of all. And before we go into the different types of change of characters, I will be showing you what the change of characters in this case will be. Now, in this case, this is an inducement. This is an engineered liquidity, and this is our confirm higher low here because it caused a valid break of structure. So if you want to draw, if let's say you are waiting for a change of character, this is where you will need price to break below before you can have a change of characters. This is the first case in a change of character whereby the market is trending up directly. So now, where is there are times whereby we can consider this here as a change of characters. Now, this exception occurs only if price reacts from a bigger time frame POI. You need to be very vigilant, right? If price reacts from a bigger time frame POI, the first low is a change of characters. But if price doesn't react, or if price is not coming from a higher time frame POI, this low here remains inducement. This low here remains an inducement until price breaks below the low, the last valid low. The last valid low. When I said a valid low, it's a low that took out inducement then and gave a break of structure. That is what I call a valid low. So this is advanced SMC, right? And the rules are different from the normal SMC. What differentiates you from the people that are trading normal SMC is this rule, inducement. Inducement is a very powerful concept. The only thing that I can give you as a gift for during this festive period is this video. So make sure that you follow me, make sure that you subscribe to my channel, like and follow. Let's push this video to reach 5,000 views. Let's help 5,000 people to improve on their trading journey before the end of this year. So looking at this is where our change of characters is. If the market pushes below from here after tapping into a point of interest, our change of characters now will be this point. But now, in this case, we don't have a point of interest, right? We don't have this point of interest. So if the market now pushes down, this will not be a change of characters. If the market starts pushing down, that will no longer be a change of characters. That's not where we'll be waiting for a change of characters from. Let's say we have something like this, the market starts pushing down like this will not be considered as a change of character because the market is not coming from a higher time frame. So what normally we expect is for this zone to break before we have a change of characters. Maybe you have something like this now, and now you have your change of characters. In this case, now you have your change of characters. And what do you also have here? You have a flip zone. A flip zone. Now, this is what we call a flip zone is a demand zone that turns to a supply zone. You see what happened here? This was our last strong low here. Now, this low got violated. This price tapped into this low, then tried to push up, but could not push up and failed. So it gave us a change of characters. There was a change of characters here, so we can start looking for sell. Now, I know many people will just come here, right? Many people will just come here and map this out. They already know that, okay, this is already a trade here. They just map it out and say, okay, this is my flip zone. When price comes to this zone, what I'm going to do is I'm going to have something like this. I sell, I put my stop loss here, and I draw something like this. Of course, this is not how the market works. This is not how it works. This is another trap designed to kill your confidence in the market. It's designed to take your stop loss. Now, this is a flip zone here, right? It doesn't mean that you should sell from it. What happens here is if this flip zone doesn't have an inducement before it, there is no need for you to sell from this flip zone. Let's say this flip zone have something like this. When I say an inducement, this is what I mean, right? The flip zone has another low. After the flip zone, there was another low below it. Now, this low here acts as our inducement. Let me explain to you why this low acts as our inducement. That's because all these newbie traders, all these newbie SMC traders with the basic SMC knowledge will be looking to sell from here. They'll be looking to sell from here. An obvious level in a market will always fail. When a level is too obvious in a market, will always fail. There are people that will sell from here, sell from here, sell from there. But obviously, the market doesn't want to give everybody money. It's just you that you're smart and you that you have the patience to wait and see what the market is trying to do, that you will make money in the market. So the people that will be trying to sell from here, is this is where the others many people will get trapped. Now, when many people get trapped, now the market does something like this. This is what the market does now. The market counts here, gives a small reaction like this, continues up, then taps into a flip zone now, and finally drops, giving a change of characters here, returning to the extreme POI and selling. Now, you see now that the market is starting to make sense. It is looking complicated, but it's making sense. Now, after all of this, right? What do you also see here? You see that the criteria for a break of structure was met here. The criteria for a break of structure was met here. This was an inducement here. The inducement got taken out. The market pushed below and broke below this low. So this is a valid break of structure at this point. The market is not complicated, guys. Let's not complicate it. Let's keep the market simple and not complicate it. It's very, very simple. So now let's say this flip zone. We're looking at probabilities, right? Let's say this flip zone never had an inducement before it. What happens here now? If this flip zone doesn't have an inducement before it, what we do is we don't use that flip zone. That's just as simple as that. It doesn't have an inducement before it now. This is what we are looking to do now. The flip zone now becomes our inducement. Just as simple as that. Marking structure and trading the real market is very simple. Now, looking at this, right? This will be our inducement. We'll be looking to sell maybe from an extreme POI here. Now, before we go further, please make sure that you have subscribed to my channel. Please help me reach 2,000 views, 2,000 subscribers by the end of this year. Then I'll give you guys something very rich. So let's go to the next example. Let's go to the next example here. This example is similar to the previous one. So we have an inducement here. We have an inducement here. The inducement got taken out by this move, and now we have a break of structure. Now we have a break of structure here, right? And here, this is not a break of structure. This is not a break of structure, but this is a break of structure here. This is not a change of characters. This is not a change of characters. This is a break of structure here. This level here is our inducement. Now, after your inducement, we have a decisional POI, right? If the market is pushing down here, maybe you can buy from here, but it doesn't mean that this was a break of structure, because the market has taken out inducement. You can buy from the decisional POI or you buy from the extreme POI. Now, so this is where our next break of structure is. This is where our next break of structure is. And we also have this break of structure here. So this is the inducement. And the reason why I'm marking them, right, each of them, you see that each of them must have taken out a low. The way the market traps people, guys, it's very complicated. The way the market traps people, right? You might think that the market is just trapping those who map this as a break of structure. Those who map this here as a break of structure, you might think that the market is just trapping them. Obviously, right? Let me show you this example. Somebody maps this. Sometimes it works, right? But it doesn't mean that you're right. For the fact that something works doesn't mean that you're right. Sometimes you mark this as a break of structure. Let's say you get this and you buy from it. Now, at what cost? You buy from here, it hits your take profit. You are very happy that you have done something. You have done something. But now, here you mark the very thing, it doesn't work. You mark the very thing here, it doesn't work. You mark the very thing here, it doesn't work. Now you see that your strategy is having maybe 25% win rate. So it's not like if you mark all the inducements, they will not work. Some of them will work, right? Some of them will work, but that is not the right way to map it. And some of them are working like that, right? Majority of them will be failing. I know that many of you are facing these difficulties. I myself have faced these difficulties. I've been trading for almost 4 years. Above 4 years. Sorry, I started in late 2019. So I have faced these difficulties. I've traded all of these basic SMC. I've traded ICT. I've traded support and resistance. I started with indicators, went to chart patterns. I've traded all of these things and I've seen how they disappoint. How they disappoint. If you want to study, right, stick to this trading, to this structure I'm showing you, and you become great. In 1 year's time, you come back to me and ask and tell me, right? I don't want to ask. In 1 year's time, come back and tell me how this has improved your journey, how this model that I'm teaching you, how this way of marketing structure has improved your journey. I have many testimonies on YouTube. Right? Just check the previous videos, even you'll see them. You can check out the TikTok as well. You see them there. The messages are coming in. People just text me to say thank you, thank you, thank you, thank you. I've gotten tired until I cannot reply most of them. I cannot reply most of them. The only thing is the channels, right? My channels, especially the YouTube. The only way that you can help me is support it. It should grow. I might be teaching the right thing, but many people want flashy things. I don't teach flashy things. You see my computers, you see my setups, you see the way I teach. It's very basic. I want to get it down to the people to understand. I don't want content clickbait, right? If I did clickbait, my channel would have been at least 10,000 subscribers by now. But I don't do clickbait. I teach directly what the market is doing, and what I've experienced from the market over the years. Now, looking at this, right? You see that this is a break of structure, this is not a break of structure. So basically, that is how we deal with the market. Now, we can look at different examples. Different examples. I took out different examples, right? I have many pairs. Let's start with let me see, we have AUD CHF. This setup was sent in the group. You see a very magnificent setup here, which I sent to the group. And trust me, we cash out very big on this setup. We cashed out very big on this setup. Now, let me go to the 4 hours time frame so that it should be easy for you to see and for you to understand what I've been teaching you. So, oh yeah, this setup has not yet completed there. I think we have another setup on another pair. It should be USD Swiss franc. Yeah. So, basically, what I've been teaching you, right? Basically, what I've been teaching you is that this is it here. Look at this here. Look at this. This market has been pushing down. This market was pushing down massively. We had a break of structure here, but this break of structure was not valid because it was a sweep. You see that this move here, right? Price did not really close above below this move here. So we just transfer it to this zone. Now, after this zone now, price gave us a change of characters. Gave us a change of characters here, and this is where we got our first buy. But I ended up exiting this buy just somewhere around here. That's it. That's just the basic of it. I exited it here. Then now when the market rallied up, it came down now. I saw this zone here. Let me switch to let me try the 3 hours time frame. You see this zone here, it rested below this our inducement. Look at it, right? When I tell you that inducement will sometimes, when you buy from an inducement, right, the market will make as if it wants to move. It make as if it wants to move. You'll be thinking that, oh, okay, the market wants to move. Let let me just make money. But actually, the market is not planning to move. The market is planning to fool you to add in more positions, So you see that this zone here, it gets some sort of a reaction. It gets some sort of a reaction, gives people profit, and people were thinking that okay, now we are in profit. Let me add in more position as the market goes up. But the market pushes below, took out the zone and tapped into this our true zone here. Now this true zone is below our inducement, and this You see that from this inducement to here, we have a very huge imbalance. The price filled in the imbalance correctly. So you see all of this. You see all of these mappings here. These are also structures. This is structure on a smaller time frame. I was tracking this market, not both just not in this time frame, right? I was tracking this market on the 4 hours time frame because of this zone, and I was also tracking how the market was progressing on a smaller time frame, which was the 1 hour time frame. So when the market got here, right? When the market got here, let me show you. When the market got here, it tapped into this hour. On this time frame, this is an order flow. So when the market tapped into this order block on the 4 hours time frame, is another block. And what you see here is this was our last break of structure here. The market gave us a change of characters. Now, when the market gave us a change of characters, right, I did not just go ahead and buy. You see that this was an order block here. But now, what did I say about these zones? You need a smaller time frame confirmation, and you need to wait for inducement. If you bought here, right, it would have been kicked out. There's no way you put your stop loss below this low when you buy here. There is no way. If you buy off this zone here, you never put your stop loss below this low. This is about how many pips? This is about let's measure. Let's measure. Let me not be speculative. Let's say you bought from the body of this candle. Now let's measure it, right? That's 27 pips. I myself, I don't do 27 pips stop loss. Do you know how much that 27 pips is? I normally take about two positions with this type of pairs, and that 27 pips, that's with standard lot one. That 27 pips will be $270 in loss in a single trade. That's enough to build up if you have numerous losses on your funded account. So now you see that after I allowed prices to push below this inducement and tapped into this zone, I could now reduce my position to could now reduce my stop loss to maybe about, look at it there, that's 12 pips. That is 12 pips. So initially, the person that bought here and put the stop loss here got hit. This must have been around 12 pips. But now, if you do not buy here, if you bought here and put your stop loss here, right, the amount you are willing to risk, I can take around 4 trades here and risk the very amount with you. So that is how the market works out, right? And when the market tapped into this, that was not even where I entered. I waited for the market to push up, giving us another break of structure. It gave us this zone here, right? And there was and also an inducement here in a smaller time frame. So this is where I ended up entering my trade here. The reason why that position is a little bit up is because I manual execution and all the like with spreads. So this is the zone I took, and yeah, this trade from here, if I measure up, you see the number of pips it's currently at, right? That is 78 pips. Now multiply it by my lot size one, which I use, that is $700 per trade, right? And I normally take 2 trades, so that is 1,400. As simple as that. I'm risking in a total, right? That 12 was $120. $120 plus $120, that's $240. I risked $240 to get 1,400. This is almost 1,500. I've not counted that point eight there, which is supposed to be $80. So 1,500. So that is how we trade, right? Now, looking at this, let me show you another example on USDCHF, which we took the very trade, the very what I've just shown you. That's it. Sorry, please just give me a minute. Okay, so as you can see here, right, if you look very well here, let me switch to a 2 hours time frame. If you look very well here, you see that basically this market was just pushing up. Now, drawing out the example I showed you, right, let me show you the type of trade we got here. When the market is complicated, right, you can try to outline it. You just outline it this way. You can compare it to the line diagrams you have. So what we had here is we had something of this sort. we had something of this sort, right? Something like this. There was no real break of structure in this case. This is where our break of structure is. This is our break of structure in this case. So now the market just took out our inducement. This was our inducement level here. As you can see, the market took out this inducement level. Then when it pushed below, it came to our zone. The reason why I took this zone is because that zone had a confluence, right? You see that this zone swept it swept this previous low as well. So when the zone sweeps this previous low, normally this becomes a high probability zone. So after that, right, if I want to map up a break of structure here, this is where a hidden break of structure will be. This is a break of structure here. You will not see it because it looks too small, but that's break of structure. Why? This is inducement here. This was an inducement here. The market pushed below, took out this inducement, then break above. That is a valid break of structure. So what do we need to buy, or what do we need to enter? We need just an inducement at this zone. So now this inducement has occurred here, right? This zone. So when the market came tapped into this zone, we waited for a change of characters. After a change of characters, on a small time frame, we had an inducement here, and we bought off this zone, giving us that huge structure. Guys, that is how easy it is. This is literally how easy the market is to trade. It's very easy. I have many of these trades. If I show you, right, let me show you. We had a trade here on go. Don't mind me, it's a very small, it was a very small 5 minute, I think it was 5 minute setup. That's it. That is it. You see here, the very thing we bought. If I held this trade should have given me 3,000, about $3,000, but I ran somewhere around here. We have many of these trades. We have many of them. I have many of them like that. If I want to count, we'll get lost somewhere. I think I had a setup here. I never okay, yeah. There are many of these trades. There are many of these trades. This all of these trades like this, you see, I resetted my charts last week. I resetted my charts last week. You see this type of trade. Very demure. Look at it. Look at it here. This is our break of structure, right? This is our break of structure. Why? The market took out this inducement at this level. And what happened is the market did not just take out the inducement, it swept the inducement, making this POI here a high probability. So after that, what do we wait for? You wait for inducement to be taken out. This is our inducement here. Our inducement got taken out and we sold. Look at it. It took just 2 hours for this trade to hit TP. You want me to calculate how with you how much pips this was? It took two, and this was on Friday. This was on Friday. I'm making this video on Sunday. So this is about 170 something pips. Now, now looking at this, how many trades do you think that if you learn this strategy, how many of them will you be able to get? You'll get majority of the trades. You'll get majority of these trades. This strategy like this, I'm telling you, majority of the people out there, they trade them. They trade this strategy. You don't just know because they don't teach you on YouTube. I'm sacrificing what is supposed to be premium content for you guys. Actually, this is premium content I'm sacrificing for you guys. And what I'm teaching you here, many people will not be happy with me because I'm teaching you advanced stuff, which on YouTube they normally just teach basic stuff and then they reserve the advanced stuff for their mentorship. That's why you hear somebody will teach on YouTube and tell you that come and buy my mentorship. I have more advanced stuff there. I don't do that. I teach you what I know will work for you in the market. I know what I use. Right? The only reason why you can come in for me for mentorship is because maybe you want to advance your skills very fast. You want to advance your skills very fast, and you want to you want a mentor, right? Psychologically, you need a mentor. And there are some times whereby the market is complicated. You need somebody that is already more experienced in your strategy to guide you through all of those things. So let's go ahead to the next topic. Okay, so let's just end the video here. Please make sure that you have subscribed to my channel. If you are still watching at this point, then you had something that you really looked up to. So make sure that you have subscribed to the channel. Leave a comment on what you think I should cover next. Leave a comment on what you think I'm not doing right. And yeah, I will make sure that I try to improve on it. And yeah, that's all. Thank you. God bless you. Have a nice trading week. God bless you.